Hello guys, welcome to my YouTube channel. So today we are going to discuss a new topic in our channel. So that is order flow. So basically the thing is a lot of people identify and take market structure as a key thing for any trades for them to place or to even to form the bias. But what I would like to say is in trading you would be profitable, you will be successful. uh, not for everyone, for majority of the people who have spent some decent amount of time in the markets, they only need to change their perspective in terms of the concepts that they are using. For example, for me, support when it has been replaced with liquidity or liquidity sweep, that has made a lot of better sense. And likewise, a lot of people trade break of structure, change of character stuff. So the SMC guys, they'll focus on imbalance, break of structure, change of character stuff. But what I would definitely recommend for you is to focus on order flow, guys. So, for example, if we want to start fundamentally, market has started to this point, right? Now what is your anticipation whether it will go up from here or whether it will go down from here? So what is this point? This is called point of interest. So whatever the previous data that has formed in the market, for example, there is a swing high to swing low. Okay, for example, this is the swing high to swing low. Now can you make any decision whether market will continue to go down or continue to go up, or take out this liquidity sweep as target, or it gonna go down? No, you are not sure. For that, what we need to see is we need to see backtested data. What sorry, not backtested data, the previously formed data is what we need to be considering. See, for example, now this is a swing, market has formed. Now we are at this point. So what we are anticipating, market to continue further down or continue to or reverse all the way and target these highs. So some factors will help us in deciding the narrative that we want to build in the markets. For example, if there is a fair value gap here, okay, so we want to see what market does here. So whether it gives some sort of reaction and gives any sort of bearish order flow, like lower lows, or they form some sort of accumulation, manipulation and distribution, so that this works as an order block and we can sell in the retest and then trade to the lower. So that we'll get a confirmation that market has tried a lot to take out these highs, but it couldn't. It has formed this accumulation, manipulation, distribution, so that this is a protected high and this will be a weaker low. This is the first scenario. Second scenario, for example, there is a ton of liquidity here and market has given this up movement. Now, this bearish bias would be so convinced because there are equal lows. There is a ton of liquidity pool that has been generated. Now, what we want to see is we want to see again if the fair value gap or order block, if there is any order block resting over here. So we want to see if market reacts to it, so that we will sell blindly, not even blindly, but to some reaction that market offers us. Now the conviction, the narrative has been more stronger because the target is easy to identify and we could literally put them as potential targets and form the bias towards the downside. This is the scenario 2. Next scenario would be, for example, if there is a liquidity above and market has created this. Now, all the way to reverse the market, we need some sort of catalyst zone here, because why market has to go all the way down? As we mentioned in the previous two options, either it could take resistance from this fair value gap or order block or whatever reason and could come down, right? But why we are planning to trade buy side that all the resistance? Because see, for example, if market has to target these highs, okay, there are some resistance points right there, if there are any. If market is offering any, first one is FVG or any order block. So this is the resisting factor number one. Second resisting factor number two is this swing. So we need to see whether this swing high will be acting as a catalyst to push market further down if we are in a downtrend, or we want to see if market is gonna slightly react to it, but all the way that it will ultimately reach to the target of this liquidity pool, taking out this liquidity pool. So we want to see whether this point has the strength to take out these equal highs. So for that, what we need is we need a strong point of interest. I am saying all these things only to conclude that how strong the point of interest is. we can derive the strength from this point of interest, and we can form the narrative, based on this point of interest itself. Sorry guys if I'm confusing a little bit. all i'm gonna tell you is all I want to tell you is that, first of all, if you want to get into the markets, before positioning yourself, you need to know what market is exactly offering us, what market is trying to do, or what is the target for the market to go to a certain direction. These factors contribute us in helping our uh, what do we say, narrative. So you are putting your hard-earned money into the markets only to make better of it. So whether the returns could be 1% on your capital, 2% on your deployed capital or overall capital. So whatever your reasons could be, but for that you need to have a clear direction, and that clear direction comes from clear point of interest, clear goals that you want to see in the market to unroll in the coming time. So my reason is sorry my point saying all this is to focus on the point of interest. Second thing is to know where you want to target the market. Third thing is order flow. Right now we are going to discuss about the third thing, because these two first things are very easy to identify, because okay, for some people who are beginning their journey in the ICT concepts or the concepts that I am trading, they might find it hard to find what exactly acts as a catalyst for the market to make a turnaround. Okay, so we are not hoping to make v reversals here. We are only uh, you know trying to guess market direction for a short period of time. That is what intraday trading is all about. You have to guess the direction only for a short period of time. In the next 6 hours, if market could reach this target or not, does it have enough potential to push the market to some direction or not? That is what we need to do. So what is the deciding factor? What is the target? Why it has to go till here? So these are the main objectives that give you a better understanding in decoding the charts. Okay, so we are here in a weekly time frame in Nifty Bank. So what we are going to see here, no gap candles. So I have turned it off, no gap candles. I have seen a person asking me about the indicator as well. This is the ICT kill zone plus pivots. So if you want, these are the settings. So if you want, you can adjust the settings as well. You can turn off these boxes. Otherwise, market will highlight the kill zones. So better turn them off because we don't need them in our Indian markets. Okay. That's it, guys. So now we will discuss. For example, so what would be the market's scenario for us to even form a bias? Okay, now market is here, right? Okay, we don't need no gap candles. So market is in this zone. So what market is doing? This is a clear cut uptrend, right? Because basically the trend lines have been formed only to see whether market is an uptrend or downtrend. Because if you want to draw a line where market is going, if you just simply draw this, you can clearly see this market is going upside itself. If you draw something like this, which means the market is clearly downtrend. But some people draw it here, resistance, support, and all theories, their wish. Okay, so what has happened? So market has gone up and it has come down, and now it is trying to go up. So why this point is acting as a catalyst for the market to go up? So what is on the left side? On the left side, there is this order block. What is inside this order block? This order block becomes so powerful when it has one thing, fair value gap. Second thing is any sort of volume gap. So these two are very important things, and these two things make this order block so powerful. Okay, please remember this, guys. I'm not saying that an order block without these two are also are inefficient. I'm not saying that they're also efficient, but it gets more efficient when it has fair value gap or some sort of volume gap inside the order block. Okay, so let's put it aside. Now this is an order block. So what exactly is the point of catalyst here? There is a volume gap here. So now once market has come, now your initial hope is you have identified this order block, right? Now once after identifying this order block, what you want to see, you want to see market respecting towards this either fair value gap. Okay, either fair value gap or this volume gap. Now you will wait until the market reaches this fair value gap or volume gap. Yeah, what you will do right now? And now market has generated this huge bear bar. This is the first tap into the market, right? And market has created this up move. So which you clearly see if you go into the lower time frames. So this is the lower time frame. Okay, guys, I'll turn on the no gap candles. Even I am confused onto how to explain it to you guys. Now market has generated this bearish momentum, tapped into the fair value gap, and it has created this up move. So if you still further go yourself into the lower time frames, you will see some sort of order flow shift that forms in the market. Yeah, not exactly order flow shift, but yeah, I'll tell you the difference. That is what I want to discuss today. Now I'll tell you the difference. So market has tapped, it has just gone up for a little bit, and then it has crashed down, and then tried to go up, but then again it has crashed down. Now market clearly is in bear trend, right? Now who is going long here? Nobody is going long. So that is what market intention is. It has broken out of this trend line. So no, most of the people who trade trend lines, they are all bullish. Where are the stops? All the people who have shorted in this area, their stops are here. Who shorted here, their stops are here. Who shorted here, their stops are here. So there are all resting stops. So these become low resistance liquidity runs because there is no major swing that is protecting these stops. But we are not sure whether this move, this fair value gap, will all the way push the prices higher to the much higher prices. So we are not sure. Now what do we see? We see a breakout. Now we can form some sort of bias if there is any order flow shift to the upside. But in 1 hour candle, if you purely trade 1 hour, so this is the only order flow that you can see. Bullish momentum. I don't even call it as a bullish momentum. Now all the SMC people, they'll consider this as a structural breakout, a break of structure or change of character or something like that. Now what they are trying to see, they are trying to find levels, discount levels, either this fair value gap works or this order block works. They are trying to wait until the market to come to this zone and give any sort of conviction so that they'll trade higher to these resting liquidity pool. But what market has done, it has literally created this up move only to trap all the buyers. And all the people who have initiated buy positions, long positions, have placed their stops here. So market has given them slow conviction that I am trying to go up, see the up moves. All the people are manipulated with this huge bearish move. Now who is bullish here? Nobody is bullish. Seeing this momentum, do you think you are bullish here? No, you are not bullish. And now let's see what has happened. No, let us go into the daily time frame, guys. Market has tapped into this volume gap, weekly's volume gap. Now see the Kachra price action that has formed here. Now formed, it has gapped down and market has fell down. It has opened here, it fell down. Now who is trying to long here? Everybody is trying to see that market is not bullish at all. So how do we plan buy bullish trades here? Now market has gone up. There is this first resistance uh, that is in the market. The first resisting factor is fair value gap. The second resistance factor is order block. Third resisting factor is swing high. So there are multiple resistance points. So what market has done? It has created this reaction and has come down. But this reaction was enough for the market to displace below this swing low? No, it didn't. So there is some sort of holding in this volume gap, weekly volume gap, right? And market has gone up, it has come down, and it has gone up. So once this is broken, there is a shift in the order flow. So the bearish orders have been pushing the prices till here, and the bullish orders have been, pushing the prices to till this fair value gap, and then bearish orders have been again executed. But still, these bearish orders have been overpowered by this bullish orders. It has gone up, and a bearish candle has been has formed, and then again you see this bullish engulfing bar, and then there is a bearish hammer candle, and then there is bullish bar. So this is a shift in order flow. This is what we need to see, that the order flow that has been printing the prices towards the lower side has been trying to print the prices towards the higher side. So this is what we want to see exactly in this scenario. Now we can confirm ourselves that this weekly volume gap is trying to act as a catalyst that is pushing the prices towards the upside, and we get confirmation by this shift in the order flow. Okay. I'm not sure to how much extent people are trying to understand, but that's okay. Now you see, guys, these two weekly candles, market did not close here, only formed some sort of wicks, and then prices have been printing towards the upside. And then when once market has reached here, this action this acts like an order block, right? Because no, it has created a low, it has created a high, it has created a lower low. No, this has acted as an you know uh, potential order block, bearish potential order block that could no push the prices downside. But your narrative is what? Not the bearish side. Your narrative is towards the bullish side. Why your narrative is towards the bullish side? Because you have strong point of interest, and these point of interest have been backed by the bullish order flow in the daily time frame. Always remember that you cannot trade in single time frame if you're trying to trade in this ICT concepts. You always have to use lower and higher time frames, the combination of which makes you a better understanding, which gives you a better understanding of the markets. Okay, guys. So this, we obviously know that it will fail, but market has given some sort of a reaction. Now imagine the sort of uh, uh, what do we say, the sentiment that it has created. Bearish order block, lower low order flow, and then market retraced. It has created this huge bearish engulfing reaction. Now what everybody is trying to see, they are all trying to form their bias towards the lower side, right? And some people might even position themselves once the bearish engulfing candle bar breaks low is broken. They'll create a position here, placing their stops here. This is again a good thing for the market to go to the upside. But what market has done? Why it has gone up? There are a couple of reasons. You see, gap. Exactly, this is the gap that has held the market, you know, to push the price towards the upside. Now you can ask me, bro, there is another volume gap also here. So why market couldn't react to this volume gap and only has reacted to this volume gap? There are a couple of factors, and there is a probability issue also. First thing is, this bearish candle acts as an order block, and in this order block there is this volume gap, which makes it a high probability for the market to go down right when market has formed a sentiment clearly and obviously to everyone that it is going down. That is where market does the opposite of what everybody is thinking. So this volume gap has reacted. Now you could confirm this by seeing the order flow of this area itself. Once market has tapped into this area, you could go to the lower time frames and see whether market is trying to change the shift from bearish to bullish. Now that is what we are trying. We will definitely do it. We are gonna do it right now. So this is the first point, that market has come down. This is only daily candle, so there is no clear cut indication that the market will exactly go up or not. So 4 time frames is not a great time frame to look into in our markets. Of course, it does a decent job, but not great. Now you see, in 1 hour, market has tapped into this zone. Is there any sort of bullish order flow? No. See, guys, remember one thing. We are all the way coming from weekly time frame to daily and 1 hour. We are not going to weekly and 1 minute directly. So you need 3 time frames to trade these concepts. First thing is high time frame bias to know to see whether the market is in right condition, a right place or not, to either go bullish or bearish. Second thing is, I mean, simply first thing is to find point of interest in high time frames. Second thing is to see if there is any confirmation of this point of interest or not. This point of interest says market is going to go up. Whether this is backed by the confirmation time frame or not. So this time frame should always confirm this point of interest. And third thing is your entry time frame, because this is where you get an edge. When point of interest is aligned with confirmation, then you need to find an edge. That edge could be varied from person to person. Some people trade trend line, some people trade a regular ICT imbalance, order block concepts. So it's a personal choice to their preference. Okay, so you need to have 3 time frames. Don't skip this second thing and directly come to the directly come to the third time frame. No, never do that. Always have a point of interest from higher time frame, that is forming a context. Second thing is you need to confirm whether the context is aligning with the confirmation or not, and then after confirmation you can have an edge. Okay, guys. Now market has come down rapidly, so there is no shift in the order flow. Now this volume gap, see how market has held it. So once market has tapped into it, it has given an up move. Now are we gonna buy this? No, market has retraced further a bit because nobody is bullish here seeing this up move. This is a manipulative move that we know, but a lot of people who trade regularly, they are all waiting for the market to retrace, or even they're trying to short. Even a lot of people have gone shorts here. So what we see is up move, retracement, and then an up move. Market consolidated for a bit, and then it has come to the first volume gap in a weekly time frame that we have marked. and market has taken some sort of support from here and then it gone up. So this is the shift in bullish order flow. So it is gone up, it has come down, bullish orders printed, and then some sort of consolidation, and then bearish orders printed, and after taking out the you know liquidity sweeps, and then it has shifted the order flow towards the buy side again, targeting this high, or if there is any objective in the weekly time frame, that high. So this is a broad picture, guys, on how you want to trade into the markets. So I just want to take this example and want to show you how this has been used even in my personal trading also. So not even in my personal trading, this is the only thing that I'll use. Now you see, guys, we will discuss in this time frame itself. Now the current scenario, market has taken out the liquidity sweep on resting above this high. So market has given this breakout. So everybody is bullish. Market has given this some sort of candle. I'm not sure how many people are trying to form their bias bearish based on this candle, but if they have done it, they have done a decent job. Market has formed a low. These lows are everywhere, here, 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 and here also. These lows are everywhere. But what market does after this, forming low is very much important. It has gone up and it has consolidated. It has gone down. So there is some sort of shift in the order flow. The order flow has been bearish, retraced, and then some sort of bearish order flow in it. So prices are willing to go low itself, and then it has created this huge manipulation buy side trade. Now what we want to see, if we want to, when we are conformed with the trade direction, what we want to see is, we want to see for the market to retrace to our point of interest. That is, first thing is this high, second thing is this volume gap. So only these are the two factors. There is this inverse fair value gap also, but even this swing high and these volume gaps are precision pointers from where market could act as an catalyst and then print prices to the lower side. So it clearly has come till here. So everyone who is bullish after this breakout, they are also trapped with this bearish, engulfing bar. So this is the point here. And once market has come down, it has taken some sort of support from this order block. So that is why you see this inside candle. And what market has done after that, it has taken out the previous day's highs. There is this fair value gap, there is this order block as well, because this is all an order block, and market has continued its falling and targeting these equal lows. So always remember, guys, you need to find the right point of interest. After finding point of interest, you need to have an intermediate time frame that tells you that gives you the confirmation of that point of interest working or not. And then you need to have an entry level time frame that designs your edge. So this is all about today, guys. So I just want to speak a little bit technical stuff regarding the order flow and point of interest. So I hope you learned something from this video. So thank you, guys. That's it for now. I think it has become too lengthy as of now itself. So that's it, guys. So we'll try to upload videos more frequently as possible. So stay tuned, guys. See you.